Hi and welcome to the Market Alert for Thursday, the 17th of June 2021. Powell pummels bonds and bullion, saves stocks with a grain of salt. So what is the grain of salt? Well, brace yourself for this one because this is directly from the Twilight Zone. The Fed blinks and projects 2 rate hikes by the end of 2023. So we're currently in June, halfway through 2021. So 2022, the end of 2023, so that's 2.5 years. So on the basis of a projection of increase in interest rates by the end of 2023, the metals markets were pummeled, the dollar rose, and the stock markets had a giant shakeout. Honestly, it's just the Twilight Zone on steroids now. Unbelievable. So, what do they generally increase rates by? 1/4%. So we're going to see a 0.5% increase in interest rates by the end of 2023. But we know it's not going to happen. That's for certain. This is what's known as Mission Impossible. It simply isn't going to happen. If they could raise rates, they would already raise rates. They know the whole system is that fragile. It can't even tolerate a 1/4% rise in rates twice through 2.5 years. It is just unbelievable. And of course, the market loved this. Well, JP Morgan loved it because they managed to smash the price of silver down $1, and gold also got hit, and the dollar spikes as hawkish Fed tilt batters bonds and stocks. It's just incredible. That's how desperate they've become. And to top it all off, you just couldn't make it up. On this headline here, it says Fed Chair Powell explains how a Fed-driven surge in cost of living is helping the poor. If anybody can help me out with this one, then feel free to comment because I haven't got a clue. I thought the rising cost of living, if you're on a minimum wage or income, would have a major impact in your spending ability. And here we are, he's telling that it's actually helping. So if anybody can explain it to me, I will be delighted to hear. This is the Twilight Zone. It really is. News today. After yesterday, what have we got? Just the weekly claims in Philly Fed. That's all there is today. But the market will make its own direction following yesterday. Which direction? Who knows? Who knows? One thing for certain, the stock market's in the clear now for the next couple of years. That's for sure. Let me find the Dow. Here we go. So yesterday the Dow, I tell you what, let's go down into a smaller time frame first and have a look. Start with a 30-minute. So the Dow opened in the afternoon, traded sideways. You can see the retracement, and then as we got closer to 7 p.m. The market started to move lower and then just fell out of bed for 30 minutes and then rallied back, but eventually ended up down in the lows here. So in the daily chart, you can see that we came back 62% on the downside. 78 was within shot as well overnight, but prices have managed to come back off here, and no doubt they'll make some sort of an effort to try and actually rally back, which we'll see when the futures open later on this morning. So the DAX, what was its response? Very similar, of course, as you would expect. So in the German DAX, a lot stronger than the Dow. You'll notice here that we only had a small move to the downside, and then prices also finding support at the 62% in the daily chart. So looking like when the futures market opens, I could see a bit of a bounce there. Yesterday morning, the market did move. It actually moved down 70 points and then went a further 20 points after, before moving all the way back mid-morning. This mid-morning move, it's interesting because you get this first half an hour now, and then the market does nothing for the next hour, and then we get another move. So it's like the pattern is shifting at the moment. And what I think is going on here is that when the US traders wake up, which is around 5 to 6 a.m. New York, they're using the opportunity to bring the Dow back, and that's why the DAX is following at that later time in the morning. Whereas before we used to see the traders in Europe, but since the lockdowns and traders working at home, it seems like the market's driven more by the US traders mid-morning than it is for those that used to be in the office in Europe. As the news came out, again, the reaction far less greater and soon got back to the all-time highs in the DAX. This also moving down overnight. But as you can see, prices making their way back up towards the DP level there and the 200 MA for the DAX. And if we just I'm going to shift to the 2-minute chart for a second, and let's have a look, see where this is trading as well. A bit more amplified there. You can see a lovely move in the morning where prices stayed above the 5-bar moving average, then stayed below. But like I say, overnight prices are making their way back to the upside. So let's just squeeze everything down and have a look, see where we are. We're quite a way off the high. We're very close to the low, so a break to the low will see prices move down. But they're going to do the best to try and bring this back. And let's face it, there's no concern because the rate increases are only 2 over the next 2.5 years. So pick a month, roll the dice, and wait for it. If it ever happens, that is, of course. And again, 30-minute chart looking longer term. Again, you can see the reaction here, and then the sell-off overnight, bringing the market down to the S1 already, where we see some climatic volume action and then being brought back. So the market's come back quite well already. It just depends whether it can hold at 7 a.m. when the futures market opens. So in the dollar, massive move to the upside yesterday on this, because it's good news for the currency if the interest rates are going to increase. That's what you call a dead cat bounce. I mean, for this to hold on the promise of 2 rate increases over the next 2.5 years is going to take some doing, isn't it? So yeah, we'll just see a resumption of the downside, I would imagine, as prices have moved to the upside. So we're at 89, or just through 89%. We've got the 200 MA there. Can it make the same sort of move today? Well, if there's no more news on interest rates, then highly unlikely. And prices probably sideways to lower, back below the 89. But you never know, do you? We live in a mad world now, so anything could happen. In silver, they managed to slam the price yesterday. If we come down to here and just measure up now, because this is the area where we're going to see some sort of support. We're going to look closer at this in a minute in a smaller time frame. But you can see that if they do continue to move this down with Basel III in the background and the opportunity now with the prospect of moving rates to the upside, then the 200 MA is going to be crucial, which is another $1 lower than where we're currently trading. Today will be crucial that the market holds above the 27 area. You can see the market's just come down and tested this at the moment. Last night I put an order in to buy below 27. It was 26.95. I got rid of the other positions that I had just in case, which was a wise move, and the order was filled. Let's see. Yeah, it was filled at 26.93. So when I woke up this morning, I could see it was filled. It's a shame I didn't go a bit lower, actually. I thought it was a bit ambitious to go down to this sort of area down at 26.50. I wouldn't have been filled, but interestingly enough. So I thought I'd just try and grab a contract just below here. How long I hold it for depends on what happens today. As I say, they could slam the market down to this sort of level if they wish to do so. That will be determined around 1:30 when the New York traders come on stream. That's the time that they tend to hammer silver, and 2:30 as well. So that first sort of 1:30 to 2:30 time frame. So yeah, that's where we are at the moment. That's a 5 minute of the dollar. You can see it's just drifting sideways to lower there at the moment. But it's going to be interesting going forward. But like I say, the stock market is saved. Might be a pullback, but let's face it, that's all this was about yesterday, was saving the stock market, and that appears to be the case with the Dow at the moment, where we're seeing support there at between 62 and 78. So it'll need to plow ahead to the upside in order to do this today. But it'll be an interesting day because the market now will make its decision on what it feels about the news. And frankly, it should just dismiss it in a heartbeat and let's carry on as we were. But I don't think that's going to be the case, though. We'll use it to drive the stock market back to the upside. No doubt there'll be some selling, and we could still correct down to 89% in the Dow. And then, if we do have a situation where we go into a selling phase and corrective phase, then Powell will come in and say something about he's going to delay the rate increases given new data till 2025, and that will be enough to bring the market back, send the dollar up, and hammer the metals again. So now he's seen how he can use that going forward. He can keep the pressure on the metals, the support in the dollar, even though inflation is running away. So yeah, every trick in the book. Okay, that will do it for this one. If there is anything else to add later, and if anything happens that I need to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.